Good morning and welcome to Radio Friends on Tuesday, April the 25th. My friend Alex LaBrunerie is with us today from LaBrunerie Financial. Good to have you here, Alex LaBrunerie.
Thanks, Paul. Happy spring almost.
Yeah. The money man. I call you the money man. But we were going to talk a little bit about the volatility of the market because it has... The end of last year, it just shot up there, and everybody thought, "Wow, this is great, and it's going to go on like this forever." But it doesn't, does it?
How it works. No, it doesn't. In fact, since February, the markets have seen large triple-digit swings on the Dow Jones Industrial Average.
Well, didn't we at one point in February lose all of the gain that was made last year?
For about 10 hours, I think, yes.
Yeah.
It was called the 10-hour correction.
Is that what it was?
Yes. And right now, year-to-date, as it stands on today during our session here, the stock market is down about 0.5% from the beginning of the year. Mm-hmm. So year-to-date, the market's down. And the bond market, too, the interest rate market, is also down about 0.5%.
Here's something that I could never understand. It seems like the stock market, can fluctuate on one or two words that are said by somebody. Somebody says something, and the market either shoots up or it drops. Why?
Well, and that somebody is usually the Federal Reserve Chairman, and we have a new Federal Reserve Chairman, and he said he is going to raise interest rates at least 2 more times this year, possibly more. So that affects the value of bonds and consequently the value of stocks.
But why is it so instantaneous? When something is said, the market will either fall or climb almost on an instant.
I think it changes the calculations of what a value of a security is today. If we know that interest rates are going to be higher tomorrow or sometime in the foreseeable future, then investors tend to sell or buy, depending on if that's good news or bad news.
Are those quick changes orchestrated by a computer or by human beings?
They are. Both. But more and more, you speak about artificial intelligence. We could have a HAL running
the
from markets 10 years.
Yeah.
So computer algorithms make predictive orders in the markets.
Is that why it can happen so fast?
Yes, yeah, and it's just gotten, I think in the last 20 years, with each year, it's just gotten more and more aggressive on how computerized trading has affected pricing.
Now, what do you say to people who want to invest for the long run, but they're afraid of the stock market? Everything I hear is, if you want to invest for the long run, the stock market's a good investment.
And it is for the long run. I think people need to define what the long run is. It should be more than 5 years. So now it's not 3 years can be a short run. We're on the 10-year anniversary of '08, which was the Great Recession. So that was when the market dropped almost 47% in September of this year of '08, 10 years ago.
Yeah.
So with that in mind, Paul, setting that timeline, if it's 5, 10, even 20 years, timelines are realistic. And I think people now ought to take these highs that we're seeing over the last many years and reassess their risk tolerance. People, especially people closer to retirement, who may not have 5 years until they need to create income. We should all do that as investors while things are good.
So, Alex, what do you say to people who just don't have the stomach for the quick up and down?
Well, 2 things, Paul, generally is one, if they're older and closer to retirement, I would suggest they look at studying or reviewing their tolerance for risk entirely, so that if they have too much money in stocks, then they might want to change that perspective. If someone's younger, I think they might want to get more, still study their risk tolerance, understand how they feel emotionally so they don't make a bad decision selling when the market is down, and decide once and for all, can they stomach for the long run,
Right.
5, 10, 15 years later, being in stocks while not looking at their statements in the meantime.
Right, right. That's the hard thing to do sometimes.
Yeah.
But when the market is down, isn't that the time to invest more?
That is, and so that's where saving monthly or keeping your cash reserves high enough to take advantage or move into the market when it's down is the thing to do. I think in '08, there are people, you don't want to sell when things are down, so you want to be able to just ride it out.
Yeah, you don't want to panic.
Yeah.
You don't want to panic and sell.
Lock in your permanent losses.
And everything that I understand is the best thing to do is if you can have money withdrawn from your paycheck on a regular basis, whether it's the stock market is high or low, just keep investing. What's that called?
Right.
Averaging?
Dollar cost averaging, savings. Paul, particularly Americans under age 50 really do not have defined pensions anymore. And the outlook for saving for retirement is really on the responsibility of the individual now, whether through their 401ks or so they do need to just keep saving for the long term. All of us do. We all need to save for our retirements. If you're under age 50 or so, that I think is essential.
And the thing that I realize, you now that I'm older, when you're young and you're in your 20s, you think, oh my goodness, 60 or 70, that's a long way off, but it comes pretty fast.
Very fast,
comes
doesn't
a lot
it? Once
fast.
you get over 50 or 48.
Well, 50, I think if 50 is still being a spring chicken.
Yes.
But it does come very fast. So save. That's the important thing
Absolutely.
to do. Okay.
And tell a friend.
And tell a friend about it, too. If you want more information, you can give Alex a call. You'd be happy to talk to people, right?
We would.
Your phone number?
I am 449-5313 in Columbia, or 1-800-736-7460.
Okay. We're just about out of time, but timing the market, that's not a good thing to try to do.
No, time in the market, though, is.
Time in the market is good, but
amount of time.
don't try to time yourself with the market because it's not going to work out.
That's right.
Is that a bit of good advice?
Yes, that's very good advice.
Okay, Alex LaBrunerie, thank you so much for coming by.
Thanks, Paul.
LaBrunerie Financial, and I like that bow tie you got on. Okay, have yourself a nice day. Tomorrow, the Central Missouri Honor Flight and Heart of Missouri Girls on the Run. Drop me an email, pepperpmissouri.edu. Bye-bye.